We got one problem with taxes to do. Let's just kind of go through it carefully. So first, we have an unmarried head of household with one dependent. So how many people are living in the house here? Two. So two people. Gross income, $65,000. We got adjustments. We'll take those into consideration later. Here's where we need to be careful. Medical expenses. Maybe we can use those, maybe not. What was that magic percentage again? 7.5% of the adjusted gross income. So has to be more than that. Must be more than 7.5% of the AGI. So we'll come back to that and see if it actually is or if it's not. Then we got some tax credits. So those get factored in too. All right, so first, we have to find the adjusted gross income. If you get hired at a business or an official career and your salary is $70,000, you're not going to actually get $70,000 to take home because you're going to get taxes taken out, Social Security, retirement, a bunch of other stuff gets deducted. So that's what we got to figure out. Yeah, net pay. Gross income, $65,000 minus any adjustments. In this case, we have a $5,000 adjustment. So what is the AGI? 60,000. Okay. Getting smaller. Our goal is to make this as small as possible. Okay. Now that we know the AGI, let's check the medical. So 7.5% of 60,000. What is that? $4,500. Okay. So in order to deduct our medical expenses, I got to have more than $4,500. Does that make sense? Currently, only $2,000. So we're going to go ahead and get rid of those because we can't count them. Okay? I tell you, one year my wife and I had a bunch of medical expenses, and I was like, I think we'll actually be able to deduct some stuff this year. We were like $100 away. It was so bad. And I was like, I spent so much time, I'm like, okay, there's got to be something that I'm missing. Like, what else could I throw in there? No, there was just no way to do it. But see, that would have counted towards the current year. You know what I mean? Because this is you get your tax bill in February for the year previous, so it's too late to like fall down the stairs and get more medical expenses. Okay, let's go ahead and find out the taxable income now. So taxable income is AGI, 60,000, minus exemptions. Okay, so if we look at the information they've given us, it tells us how much the exemptions are per person, right? How many people do we have living? 2. So automatically, we double the 3,500 rate. So that gets deducted. And now we have possibly, so this is the exemptions. And then over here are the deductions. Okay? And for the deductions, you have 2 options. You're either going to use the standard deduction, which is 8,000, or itemized. Itemized is you add up all the little deductions that we have, okay? And you can see 3,600 and 800, that's not going to be larger than 8,000, right? Does that make sense? Itemized would be 3,600 plus 800, 4,400. We want to use the biggest amount possible because our goal is to make this number as small as possible. Does that make sense? The smaller the amount we get taxed on, the less we have to pay, and that's our goal. Okay? So up here, since this is less than standard deduction, we can't, well, not that we can't, we certainly could. That's not to our benefit. You guys understand? Okay, so we're not going to use that. So we're going to use the standard deduction, which is $8,000. Now, if I had some more deductions in here that gave me a total of, like, let's say $11,000, then I would say, well, forget the standard. Let's deduct $11,000 because that's more than that. Okay? So, after all is said and done, what is this total going to be? 60,000 minus 7 minus 8. 45,000. So here's our taxable income, $45,000. Okay? Now that we have the taxable income, we figure out the income tax. And so this is what I was talking about, where you don't take 45,000, and then that would be, you see how 45,000 fits into here, 25%? You don't just take 25% of that and you're done with it. It's a little bit more complicated than that. So the first $11,450 gets taxed at how much? At 10%. Okay? Next, a piece of that gets taxed at 15%. Okay, and to figure out how much, you just look over here. All the way up to $43,650 gets taxed up to 15%, but we already paid taxes on $11,450. So if you take $43,650 minus $11,450, that gives us the number that we should put in here. So help me out. What is this amount here? $32,200. Thank you. Plus, and now we have the rest of it at 25%. It's not too much because we're barely in that bracket. Does that make sense? We're making $45,000 for our taxable income. We're only a little bit past the $43,650. How much further? Well, let's see. 45,000 minus 43,650. That is 1350, I think, right? So do you guys see how we have to set this up? It's not just a flat 25% of 45,000 and we're done. Okay, a good way to check to make sure you've done it correct, this number, and this number, what should all those three add up to? This should equal 45,000 because this is how I split up the money. Part of it was at 10, part of it was at 15, and the rest of it was at 25. So all three of those parts have to equal 45,000. Okay, if they don't, that means you made a mistake somewhere. Okay? So let's go ahead and figure that out. So this is the tax computation portion. What do we get when we type all this in? Make sure you guys get your calculator soon. Your phones aren't going to be allowed on quizzes and tests. I know you're using them now, and that's fine, but anybody have it yet? $6,312.50 cents. Okay. So that's our tax that we owe. But there's also something called tax credits, which could be a few different things. Maybe, when you pay your taxes, a lot of times they'll ask you if you get a tax rebate, you can just save that for next year and not get it rebated to you, but then you could use that as a tax credit. So like if you actually owe money next year, you could just deduct that. So maybe this person had a $2,000 refund check and they said, you know what, just save it for next year and I'll subtract it. And so that's what we're doing here. And that's easy to do. That's $4,312.50. So that is how much you owe. Okay? So like I said, a lot of little things that go into this to figure out what your tax is. All right? And as far as whether you get a refund or not, or if you actually have to pay, it all depends on how much you're getting deducted out of each paycheck. Okay? You guys know that every paycheck, federal and Social Security and state income tax all get deducted, right? So that starts to add up. And if you've paid more than this, that's where the refund checks come from. The government will say, hey, you paid us too much. You didn't need to pay that much. Here's your refund. Or they'll say, you didn't pay enough. You owe us another $500, and then you got to pay. Okay, so I don't know if anyone's had to pay before. Only 1 year I've had to pay. Every other year I've gotten either a small refund check or a nice one. Those are always nice when you get a hefty one. Okay? Any questions on this problem? Okay, we're going to quickly go through the rest of the unit. It's not as involved as this. It's going to be pretty easy. And then I would love, with whatever time we have left, if you can go to the tax question on my math lab and just try working through it now and see if we can get it done. Okay? Because like I said, it's going to take some time, and you might as well try to get it done while it's fresh in your head, and then that way you can just review it when we have a quiz or a test. All right, so we have two things left. That is percent increase or percent decrease, which will be pretty easy. And then just in general, more about percent and change and how that works. Okay? So nothing too fancy. But a percent increase is very simple. It's the increase or the decrease divided by the original amount, and then you convert that to a percentage. So either multiply by 100, or you can just move the decimal over twice. You guys know how to do that. So nothing too bad. So let's do these examples. Salary increases from $30,000 to $31,500. So what's the amount of the increase?
1,500.
We divide that by our original or starting amount, which is 30,000. Multiply that by 100, and what do we get? What is it? 5%? Exactly? Cool. So 5%. Let's go the other way now. Maybe after they gave you that increase in salary, they're like, yeah, we don't like you much anymore, so we're going to lower you back to 30,000. I don't know why they would do that, but so now the decrease is still 1,500, but we're starting at 31,500 because we're decreasing it from that amount. So now what is that going to give us? Should be a little smaller. About 4.8%?
Yeah.
It's not exact, right? That's rounded?
Yeah, it's rounded up.
Okay. So a little bit less. These are pretty simple, right, compared to the tax problem? Okay. Let's go to the next page. We can do this one without a calculator. These are quick, easy points. So let's say we have a tax rate that increases from 3 to 5%. What's the increase? What's the original percentage rate? 3. You should already know what percentage that is, right? It's 0.6.
Oh,
0.66.
Repeating, right?
yeah.
So about 66.6%. Okay. I guess I should throw the times 100 in there if we're going to be complete with the notes, but okay. We're going to do one more problem, and then you're going to have probably 10 minutes or so that maybe you can get that tax question out of the way on My Math Lab. Do you see it?
Yeah.
This is, I think, was that what I was talking about yesterday? So this is what I mean by, oh, that candidate, they want to raise taxes almost 67%, and so really it's just a 2% increase in this case. You know what I mean? So no one likes more taxes, but they're also trying to make it worse than it is in that case. Okay. So example 11. This is actually good. As we saw in the previous examples, percentages are easy to misuse. Like in this example here, if you think of tax rates. Here's another one. A store took its prices, cut them, reduced it by 35%. Maybe they weren't selling enough, and they said, you know what, let's do another 15%. And now they're advertising 50% off sale, right? Let's see what happens. They're saying prove that this statement is false. And no, we don't need to do a truth table for this. We could just do the number crunching. I think you guys prefer that anyway, right? Okay. They don't give us a starting amount, but you guys understand that regardless of how much something costs, it all should work out the same, right? What's a good starting amount for something if we're dealing with percentages? 100, yeah. So let's say something costs $100. Okay? So if you're going to forget where this is from, it's just an example price. Doesn't matter what it is. You could have done $6.10 if you wanted. You're going to get the same exact answer. It's just a little bit more confusing. All right. So 35% off. What's the discount now? If it's 35% of 100, $35. So what's the new price? 65, yes. So $65 is the first price after they reduce it. And like I said earlier, now they're like, you know what? Let's reduce it 15 more. Okay? So maybe off to the side, 15% of 65. So second discount, what is that? $9.75. So now we have a $9.75 decrease from the 65. So now we got to do 65 minus 9.75. Help me out.
55.25.
Thank you. So $55.25. So that's the new price. Do you guys see how that proves that it's not actually 50% off? What should we have gotten if we're starting at 100 and they're saying everything's 50% off? We should have gotten $50 for our answer, right? So this is not $50, therefore not 50% off. If you want to find the, I'm running out of space, but I'll just go down here because I'm not going to do the next problem. The actual discount is just 100 minus 55.25. I know we're talking dollar amounts, but these are really percentages, right? Because we started with 100. So they're actually doing, what is that, 44.75?
Yeah.
44.75%, not 50%. Okay? Does that kind of make sense? All right. So that's the end of 8.1.